Well, thanks everybody for joining. I'm happy to have the opportunity to speak to you all today at the Red Cloud Conference, wherever time zone you're in. I'm going to try and stick to my 10 minutes, go very quickly through an overview of Laramide. I'm only going to speak to some of our assets because we have a whole suite of assets. I think that's really the distinguishing factor maybe between us and some of the other development companies that you'll hear from today. We'll dispense with the disclaimer. Yeah, so the first bullet point there is, as I mentioned, is we're fortunate to have a couple of big trophy assets in the development landscape, which I think distinguishes us from others. I think we're in the international section of the program, even though, as you'll hear, we have a very big and interesting American asset, which is the nearest term of our production profile assets. We also have some assets that include some interesting greenfield assets, and I do think in this uranium cycle that we're heading into, I do think that greenfield's going to play a bigger role probably than it did in the last cycle. We think our valuation is relatively attractive relative to the peer group, given the scale of what we have. Our company was really built and put together to be a producer of choice, a supplier of choice to the global utilities, and the real attributes that make that very attractive to the utilities really are scale and where you sit on the cost curve, and I think we come across very well on both those fronts. We're not going to dwell too much about the various aspects of nuclear. I mean, you're all here because you think nuclear is interesting. I do think that the energy crisis that we're in now has caused everybody and is kind of going to make it a little bit of a moment for nuclear, because I do think that the public at large, as a result of the energy crisis, it's in the headlines every day now, is sort of educating the public. And I do think nuclear is going to do very well as people understand its role to sort of alleviate some of these energy issues that we're facing. Big picture on the cap structure, we're about 100 million market cap. There's about 200 million shares out. There's a pretty high level of insider ownership. And we have sort of the same composition that many of the other companies have in terms of the dedicated funds and the dedicated long only uranium, small cap institutions and what have you. I don't want to dwell on the overview of the macro landscape, but obviously, you know, the most important thing is, are we really entering a new bull market? And I think you can sort of see the chart on the lower part of the slide there. You know, nuclear goes through these very long buildups and then very intense bull markets. And we think we're kind of entering into a new bull market period there. And partly you've now had 10 years post Fukushima where this whole supply demand deficit has built up, and we think it's going to be a long time to alleviate that. That's really the focus of the slide above. And that's really the opportunity for all of the developers, and you'll hear from a lot of developers today, is really there's a giant gap between what the utilities need in terms of the amount of pounds they need to power the reactor fleet in the world and all the uranium supply that's required to fulfill that. Now, a lot of that supply over the last period of time has been coming from secondary sources and what have you. Those are really drying up. You've also got the enrichment piece now basically flip-flopping and going in the other direction. So you've got a gigantic gap underneath that green line of new projects that are going to be needed. And I think this is kind of a unique place for this particular industry, because I think it's not just going to be one or two projects, but we have room in this industry for a whole new group of entrants, market entrants, which is exciting. Now, where does Laramide sit? As I mentioned, we have two big cornerstone assets there. One is in Australia and one is in the United States, but we have a couple of other interesting assets that are smaller scale, production ready type or near production ready type assets in the United States. And I'll speak about them very briefly, but they're not really the focus today. In the United States, we're sort of located center ice of where all the positive and interesting uranium has been historically. The United States, when they were first building the defense industry applications, and then when they built their own fleet of 100 reactors, they sourced a lot of their own supply domestically, and they did put a premium on that. And the government at that point in time basically subsidized that in some way or another to make sure that there was domestic security of supply. The big source of all of that production at the time, because Texas really wasn't a thing then and Wyoming came later, was really this whole area in New Mexico, in Utah, the Colorado Plateau area. And so in this area alone in New Mexico, at one point in time, you had 7 operating mills there. And that industry at the time, which was very much a sort of 1970s on through the 80s, was kind of a who's who of big American mining companies like Homestake Mining, along with a bunch of your big energy companies, including Chevron, Kerr-McGee, General Electric. It was basically a who's who of who mattered in the U.S. uranium industry that was prominent in that era. More specifically, location-wise, where our projects are, you can see the CHURCHROCK, which is really the flagship. It's a roughly 50 million pound ISR project with very good grade. Lends itself to being scaled up at 1 million pounds a year, starts at 1 million pounds a year. It'll go through 2 phases of expansion, will ultimately produce 3 million pounds a year. We have an NRC license that allows us to do that. We're missing 1 state permit, which we're now moving ahead and working to obtain. This asset was bought, we were the royalty holder on this asset, and that asset actually, we bought that royalty actually from a subsidiary of General Electric. General Electric was the discoverer of CHURCHROCK in the very later stages of the American boom in the 70s. But it never got to production just because the market really wasn't right. We bought the asset in early 2017. And so the entire time that we've had full possession of the asset, we've kind of been living through first, the bear market that really only ended in 2020. And then we had a couple of years of COVID, which obviously affected everybody, but it particularly affected the Navajo Nation. As you can see, we're right next to the Navajo Nation, and it also affected some of our assets in Australia, because as many of you know, Australia was really tightly locked down during that period of time. So a little more detail about CHURCHROCK. As I say, it's a very significant asset. Ultimately, as I said, it can produce 3 million pounds a year at very low cost. It's going to be in the lower part of the cost curve. It's an ISR project, which obviously lends itself to being low cost to begin with. It's got very nice grade, generally speaking, vis-a-vis some of the peer group companies. And it's the focus primarily of our near-term production aspirations. The work program for the year is basically to do a drilling program. We may actually turn this into a more of a pilot scale program because we get better information, and it'll make for a better feasibility study if and when we do the feasibility study. But that basically will allow us to do a resource and will allow us to have all the data we need to secure our final permit, which is the restoration permit, which is a state of New Mexico permit. We think that's an 18 to 24 month process. Moving on to Australia, as you can see, we have a very big land position up in the Northern Australia. It straddles the boundary of the state of Queensland and the state of the Northern Territory. The stuff on the right there, as you see the map here at the top with the property demarcation. The resource is all on the Queensland side. This was an ex-Rio Tinto property. We bought this back in the last bull market. We actually secured the real estate, and then we went to Rio Tinto and bought all the data from them in a separate deal, and they have a royalty on that as a result of that. But we basically enhanced the work that they did, took their resource, basically reconfirmed it, did 2 separate economic studies. The open pit, it's an open pit deposit or series of open pit deposits. Here they are here, Red Tree, Jonaguna, and Warabagoo. Now there's other exploration targets which are very interesting. We don't really need to find any more. This is an asset we really technically don't need to know anything more about. We really needs to be permitted and financed and built. It's a large scale asset that will ultimately produce on the order of 5 million pounds a year for more than a decade. The ground off on the left there is all the resources, or all the geology and exploration potential as it extends into the Northern Territory. That's a separate property that we call Murphy. Some background here on the main attributes of Westmoreland, but it has some things that make it very attractive from a production cost standpoint. In terms of scale, very low strip ratio, very high recoveries, low acid consumption. We've done, as I said, 2 studies. The most recent study, the numbers look like this, obviously very attractive. We used $65, as you'll see, as many did, and I think an Aussie dollar of around 70 cents. The Aussie dollar hasn't moved more than 10 cents one way they have since we've owned this project, so we don't think that'll be that much of a factor. Obviously, inflation's a factor on things like the CapEx number, but they are for everybody. And the relative positioning on the cost curve as for a project like this is really not going to change. In terms of what we're doing now, we're back at it. As I said, COVID's over, the market's on, we got to get back to work. We're now looking at doing some smaller expansions and a bit of wildcatting, basically trying to make the resource a little bigger. We drilled a target called the Amphitheater, which is up here in the northeast part of the map. There's obviously a bigger opportunity in terms of the resource will be this long pocket target where we already have a bunch of resource. We just never put it in the global resource number. We'll be doing a program there later in the year, and then following that with a program at Murphy. Murphy is really the greenfield wild card to basically find another Westmoreland. We're very excited about that. We've owned that for quite a while too, but again, because of Fukushima, you know, when uranium was $25, we weren't going to be spending a lot of money on a greenfield exploration thing. We bought this thing. We were in a JV with Rio on this thing. We bought them out. They have a back end if we find $1 billion asset, but we can live with that. And it's pretty exciting. Obviously, we were to find another Westmoreland or a brand new target. That would be pretty exciting. I didn't reference earlier, but one of the capital markets things that for investors that you may find interesting is the passive flows are coming into uranium, which was not the case in the previous bull market. And it's not necessarily the case for some of the other smaller cap or resource focused minerals, elements, if you will. Uranium is kind of its own thematic, and in a way it's a little bit of a double thematic, because I do think the real opportunity this cycle is that uranium gets included in the energy thematic, which it really never has been before. It's kind of been a bit of an oddball thing that wasn't really mining and it wasn't really energy. You know, it was off on its own, but it really is truly its own thematic. These uranium bull markets have kind of their own audience. Now, the public really has a way to participate in this now because you've got ETFs that have developed. You've got a couple of big ones. I think you're hearing from Mike Alkin, who started this one this afternoon. I think he started with $3 million in 2018. I think it got to $1 billion. It's quite important. And the bars here are the relative weighting in that ETF, which kind of accords with the relative market caps of the companies. The other takeaway from this, and it's something that I've said before, because people always, you know, they always ask you the question, maybe Dave's already got this question teed up for later, you know, are you a builder or a seller? Well, the reality in uranium is there aren't many buyers. If you see on the top of that page, you know, there's your producers. You got Kazatomprom and Cameco. So I guess they could be a buyer. And then NextGen thinks they're going to be sold, I think. So where you probably will have the M&A opportunity, and again, I would stress that it's kind of about what are the assets and what's the portfolio and what's the pipeline. You're going to see M&A from within this group. And this slide is from last October, but there's been 3 deals in the last 6 months in uranium, and they're all on this slide. It's one of those 2 companies buying the other one. You know, you had Azarga, you've had UEX now being bought, and Vimy. So that's kind of the tenor, and I think that's more realistic if you're looking for M&A in the space. I think that's more of the realistic place to look for the M&A to happen. I won't dwell on this, but just these are personal views on the differences between this time and last time around, how this uranium market might play out. Retail is going to be very, very important. And again, I think in this market, it's going to look a little different, but you have a lot of things that are helpful this time around, such as zero commissions and what have you, that weren't available before. In terms of drivers and what to expect, as I said, we've got active programs now on both of our 2 big cornerstone assets, both in the US and in Australia. You obviously, this is a super highly correlated sector. Any positive action on uranium back towards 60, 65, which is realistically the price I think most of the developer universe wants to see, with some stability, to really start driving these things towards production. I think obviously we would benefit from that. ESG, we're obviously doing everything in accordance with best ESG practices. And that is a wrap.
Okay, thank you very much, Mark.